Good morning, Facebook. Jerry Heiderscheit, 1 Minute Mortgage Pro. I'm going to make a short video. I'm going to have to talk fast to make it short. If I could show you how to take your tax return and make about 70 grand with that, would you be interested? If so, keep watching. I'm going to be quick here. What I did is I actually Googled how big is the average tax return and came back a little over $3,100 out of the 50 million tax returns out there. Now what we're going to do is another buy versus rent home calculators here, where we're going to compare renting a home versus buying a home and show you how to get into the house for just using just what your average tax return is, so you get in for just the down payment itself. We're going to look at an FHA loan. If you don't know what that is, I have other videos that go over different loan programs. Check those videos out. They can explain it a little bit better. But in layman's, what that means is you can actually negotiate that the seller pays the closing cost, and you can actually get into the house for simply a 3.5% down payment. So let's roll through this real quick. Renting the home, that what we're going to actually look at in comparison here is, sorry about that, is going to be an $850 a month house. So that's what the rent is that we're comparing. $15 a month for renter's insurance and a 4% annual rent increase. I think the average is somewhere between 4 and 6%, so that's not too far off. It's actually a little bit conservative. And now we're going to compare a $90,000 home purchase. Again, I'm in Kansas. I'm right smack in the middle of Kansas. That's about the average purchase price here in Kansas anyway. If you're in Cali or Texas or something and you guys are used to $200,000, $300,000 homes, shoot me a message. I'll put together another calculator. We'll go over those numbers with you. I'd be happy to show it. It's even more drastic. It's pretty neat. So 3.5% down is about what your tax return is. So the purchase price is $90,000. You're putting 3.5% down. The funded amount, the loan amount, is going to be the $86,850. We're looking at 4.25% interest rate, fixed for 30 years. Again, no closing costs. We're going to negotiate that the seller pays those. We got homeowners insurance factored in here. We got property taxes. I'm going to figure that you spend about $1,500 a year maintaining the property, just keeping it, upkeep. And we're also going to figure that you only keep the property for 8 years. It shows that the average house right now, the average family keeps a house anywhere between 7 and 10 years. So we're going to be a little conservative and say 8. I'm not going to get into the rest of these numbers. Just know that there's appreciation, there's what it costs to sell the house and that kind of stuff. So let's go ahead and calculate this. We're going to scroll down, take a look. So just in savings, about $20,000. In appreciation, equity, tax breaks, another $50,000. Comes out to about $70,000 almost in savings. Take out your 3.5% you put down, so we'll call it $65,000 just to give you some cowboy math. Over 8 years. Imagine if you kept this house for 30 years. Let's take a quick look at what that does for you. If you kept it for the full 30 years, we'll calculate that. 30 years of appreciation. This may seem like an extremely drastic number, but if you haven't watched real estate for 30 years, if you look back 30 years, this doesn't look so crazy. So what I'm getting at is you can take your 3.5%, your tax returns from 2016 that you're getting in 2017, roll it into a down payment to buy yourself a home. Your monthly payment is going to be cheaper than what your rent is. You're going to save money, and you're going to make a lot over the years. Jerry Heiderscheit here, 1 Minute Mortgage Pro. Give me a call if you guys have any questions. Shoot me a message. I'd love to work with you. Thanks.